So welcome to everybody that's joined us today and good afternoon. The webinar today will be on innovation continuity loans. I'm Strand Smith, Lead for Diversity and Inclusion and Programme Manager for Women in Innovation at KTN. And I'm joined today by my Innovate UK colleagues. We've got Nigel Walker, who is Deputy Director for Lending and Investor Partnerships at Innovate UK, and Hamaxi Bhatt, who's Programme Lead for Innovation Loans at Innovate UK. They'll be explaining more about the innovation continuity loans and answering any questions that you have. So please do put these in the Q&A as we go along. We'll ask as many questions as we can. But firstly, I'm going to hand over to Hamaxi to deliver a short presentation to tell us more about innovation continuity loans.
Thank you. Thanks, Sawan, for that introduction. Firstly, thank you everyone for joining us for this Women in Innovation and Innovate UK webinar to look at innovation continuity loans. Nigel and I are here to answer any questions that you've got regarding the loans, and it's really great that Sawan and the KTN have been able to organise this for us today. I'm just going to sort of turn my camera off because I don't want to sound like a Dalek even, going through this. So what I'm going to do is give you a quick overview of the innovation continuity loans, and then Nigel and I will take your questions. Okay. So there's been a lot of research conducted by different parties who've suggested that access to finance is one of the biggest challenges for women entrepreneurs. If this is the case, then innovation continuity loans could be one of the routes to access the finance that you need to innovate. So Innovate UK, who are we? Hopefully you're familiar with what we do, but we're part of the UK Research and Innovation. We're part of UKRI, which is UK Research and Innovation, and our role as the UK's innovation agency is to stimulate business-led innovation, which will drive productivity, and obviously that in turn drives growth in our economy. We've got a key role to play, particularly at the moment in response to the COVID-19 pandemic, to support the continuation of innovation activity and academic research. It's been reported that when we hit these difficult times, one of the first places that businesses cut back on is R&D. And in the long term, this has quite a negative impact on our economy. And so as part of the government's overall coronavirus support programme, Innovate UK was allocated £750 million of funding to support businesses for the continuation of the R&D and innovation activity. So what does our COVID support response look like? Since May, Innovate UK, under its COVID-19 support package, has supported businesses with a number of different grants and continuity loans. We had Fast Start, the continuity grants, the Sustainable Innovation Fund, and Strand 1 of the Innovation Continuity Loan. More recently, Treasurer's recognised that businesses still needed support, and they've approved extensions to the grant award holders, as well as broadening the eligibility criteria for the innovation continuity loans. In addition, there's been a substantial increase in the number of Enterprise Europe network advisors that support businesses, as well as women entrepreneurs, in innovative businesses to succeed. So what are innovation continuity loans? This is funding that's available to SMEs that've got a challenge in continuing, completing, or following on an innovation project due to facing a sudden shortage or unavailability of funds, resulting directly from the COVID-19 pandemic. Under the continuity loans, we'll consider funding 100% of the R&D project costs that are unfunded, as well as any additional and reasonable accrued R&D costs as a result of COVID-19. What I mean by that is that it's to fund the gap that between what has already been spent and the parts that the business is struggling to meet because of the pandemic. We've got 3 strands. Strand 1 is open to Innovate UK award holders who've got a live project which they have a challenge in continuing or completing as a result of the pandemic. Strand 2 is available to Innovate UK award holders who've got a project that will follow on from a successfully completed project that they've been supported by Innovate UK in the last 3 years. And Strand 3, which is the most recent one and really has opened up innovation continuity loans to so many more businesses. It's aimed at those businesses that have a project that they want to continue, complete, or follows on from an innovation activity that's not been supported by us in the last 3 years. Or if you have been supported by Innovate UK, you've got a totally different project that you need support with. All 3 strands are available to SMEs and third sector organisations. They're available to organisations that can commit to continuing project delivery. You must also evidence loss or damage due to COVID-19. What we've got available are loans between 250,000 and 1.6 million, available for the remaining project costs that haven't been covered by any existing award and any additional R&D costs. With regard to Strand 2 and 3, obviously this may not apply with regard to not being covered by a previous award. Interest rate is 7.4%. The maximum loan term is 7 years. And I suppose the bottom line is we need to make sure that the organisation applying is suitable for a loan. What we're looking to do is we want to fund high quality innovation and not sort of the run of the mill stuff. The key is around continuity of innovation for those projects that have got, that there is a threat that they will stall or seize. What we'll also be looking at is to make sure that as an organisation, you're not an undertaking in difficulty as at the 31st of December 2019. Or that you're exempt as a micro or a small company. And just to cover off the other state aid side of things, Innovate UK is offering the funding under the temporary framework, and under its terms, the cumulative aid that the business may receive mustn't exceed €800,000 in total. Obviously, where we stand with Brexit and the new temporary framework rules haven't yet been defined for the UK. So there may be some changes we need to make to our terms and conditions later next year. So looking at the interest rate and the structures, the loans are structured in a way that we hope is flexible and takes into account the innovation activity. We think they're on fairly patient terms to support the business's cash flow. Maximum loan term available is up to 7 years, which we think is far longer than a commercial lender would consider. The way the loans are structured, we have 3 periods: the availability period, the extension period, and the repayment period. During the availability period, this is when the business will be carrying out its R&D activity and will be wanting to pay for it. So you'll be doing your loan drawdowns. Loan drawdowns are quarterly and in advance and need to be completed by the 31st of March 2022. The company will only cover interest during this period, and interest is paid at 3.7%, with 3.7% deferred until the actual repayment period. This interest rate isn't compounded. The second period, the extension period, this is really where the company is going to start its process for commercialisation. So you'll be looking to prove your business model, your pricing model, and can be up to 2 years after the availability period. During this time, no further loan drawdowns are allowed. And once again, you'll only cover interest at 3.7%, with the other 3.7% deferred to the repayment period. The repayment period, this can be up to a maximum of 5 years. And it's really when you would be paying the capital and interest, as well as the interest that's accrued and deferred from the previous 2 periods. At that point, you will be paying interest at 7.4% on the total loan outstanding. So just as an example, you've got your R&D period for a year, your extension period, you think it's going to take another year to get to commercialisation, and then a repayment term over, say, 4 years. What that will mean is that that's a total term of 6 years, which fits in quite nicely with the overall term of 7 years. There is security that's required. What we'll take is a mortgage debenture. We don't take personal guarantees, but we do recognise with the mortgage debenture that either now or at some point in the future, the business might need to take a senior secured commercial debt. And we'll be prepared to enter into a deed of priority where we will rank behind that senior lender. In addition to the security side, there are various covenants, which are sort of promises from you that we will need you to adhere to during the term of the loan. Okay, so what's the application process? There's 3 essential elements, and all 3 are equally important. We've got the business information, which is through the Early Metrics Startup High Growth Index Survey. And this is really, we'll be asking you all about the business, the organisation, and looking at the financial viability of the business. The second part is financial submission. You'll be asked to download a spreadsheet and cover off a lot of financial information, but I'll cover that in further down as we go through. And the third part, which is just as important, is the project information, and that you will do through the Innovation Funding Service. So just to give you an idea, this is our landing page, and you can access all 3 strands of the Innovation Continuity Loans. And I have provided a link to this page, which will be available at the end as well as here. Okay, so this is what the early metrics area looks like. It's a page where you can download the questions and be able to pass them around the team if that's what you need other people involved with it. It's where you'll also download the financial spreadsheet. So as we're limited in time, I'm not going to go through in detail what we're looking for, but as an overview, what we want is you to provide us with a business overview, provide us details about the loan that you require and the period that you need it for. We want details about the company structure, the management team. We'll be looking at information that you've provided around marketing and commercial activity. Tell us about your product development, what you've achieved so far, what you're looking to do for the future. And we want to see where you stand with regard to finance and fundraising, and why do you need public funding? So, and also, what are your main challenges, your main growth challenges, and your risks, and how do you plan to mitigate them? As I said earlier, within this the page that you go onto, you'll also have the ability to download the financial spreadsheet. So what does that look like? Obviously, we're really interested in your business financials because we're offering you a loan. So what we want to see is we want to see your actual historical accounts up to 3 years if you have them. If you're a much younger company, then please just let us have what you've got, even if it's up-to-date management accounts. We want to see the forecast, and your forecast must cover the full term of the loan. So if you've gone for the full 7 years, your forecast will need to cover the full 7 years. We want to know that you've thought about affordability over that full period. And please include figures that take into account your future growth ambitions, as well as any future investment activities that may be happening. On the balance sheet, we're interested in your current assets and liabilities. We want to know what other liabilities you might have. And obviously, we're very, very interested in your capital base. Do you have adequate capital to support a loan of this nature? If you have your own financial model, you can add this as an additional worksheet, but you will still need to complete everything we need, and that's been requested on the standard worksheets. Turning to the cash flow forecast, as the saying goes, cash is king. Cash is critical in any business, and especially when you're thinking about that loan. We want to see your revenues and we want to see your costs. But more importantly, we want to see the timings when things are going to be coming in and going out. What other forms of funding are you bringing in? Maybe you're getting grants, maybe you're bringing in additional equity and boost that capital within your business. We'll look at the cash availability for each year, as we want to see that you have sufficient cushioning in order to repay this loan. And to really help you, we've got a repayment calculator template where you can put in how much you want to borrow over the availability, the extension and the repayment periods. And you'll also include what and when you want to expect to draw down. What this will mean is that those calculations around interest, repayments are all made, and they'll be populated onto the profit and loss balance sheet and the cash flow forecast, so you won't need to do that. There's also another template that's available that can help you with your sales and cost of sales, which once again will populate onto the profit and loss account. This will help us in our credit analysis. I mean, fundamentally, what we want to know is that you're going to be able to pay interest each quarter when it falls due, and that you'll be able to repay the loan and the interest when it falls due in the future repayment period. The third and equally important part of the application process is provision of your project information. If you're a Strand 1 applicant, you won't need to complete this because we've already got details of your project as it's an ongoing project. But for Strands 2 and 3, this will be required. You'll do this through the Innovation Funding Service portal. And for those of you who've applied for grants in the past, you'll be quite comfortable with this. If you've not used the portal before, you'll need to create a new account. So what are we looking for in your project proposal? Well, we want to make sure that it's a high quality innovation project. We want you to respond to us in your answers on the quality of your project. We want to know more about it. You know, what's the project need? What's the challenge that you're facing? What's the market opportunity behind what you're doing? And what approach you're going to take? And really key, you know, what's the innovation behind what you're looking to do? We want to see the economic impact of the support that we're offering, and that your projects can be delivered. And you know, we're also looking at your project team and that you've got the right people in place there. Okay, looking at project assessment, under Strand 1, that it will be assessed directly by our credit team because, as I said earlier, we've got your project details. That's already been approved in the past. But with Strands 2 and 3, it's slightly different. For Strand 2, your project application will be looked at by an innovation lead. They'll review your previous project and they'll also look at your follow-on project to make sure it's credible, viable and innovative. What we want to see is that opportunity for continued growth. We're asking the innovation lead to say to the credit team, you know, is there any reason not to recommend this follow-on project? Strand 3, the project part will go forward to 3 independent assessors for assessment. They'll score the questions and they'll also look at your project costs. They'll be looking for highly innovative proposals, those that score above a particular innovation quality threshold, typically about sort of 70%. And they will then make their recommendations, which will then flow through to the credit team to incorporate within the credit evaluation. Okay, what are the key dates? Well, all 3 competitions are up and running at the moment. Submission deadlines for all 3 are 11 AM on the 13th of January. And we're expecting to be able to respond with decisions by the 19th of February 2021. It seems like a long time away, but I think it's going to creep up on us very quickly. And what we will require is that the first drawdown of the loan is no later than the 31st of March 2021. Okay. Please submit your applications early and don't be part of that 31% who submit in the last 2 hours. We know there can be technical hitches, and bearing in mind that it's unlikely that we'll be running any more innovation continuity loan competitions after these close. We really want to make sure that we've got everything you know, in advance and that things haven't been held up. So please do that as early as possible. Okay. I'm sorry, I haven't got the time to go through these, but this is our wish list for what we want applicants to consider before submitting their application. We'll be sharing the slides, so please read this at your leisure and just make sure that you've covered off some of the things that have been mentioned in there, especially the bit about read the instructions. Okay. So this is details of all the links for all the competitions and the useful guides. What I would suggest is if anyone has any questions after the presentation, please forward any questions you've got to our customer support team, who will try and answer them straight away, or they'll forward them on to Nigel and I, and we'll come back to you. It's just if you forward them to either one of us and we're not around, then I don't want your responses delayed in any way. Okay. So I hope this whistle-stop tour of the innovation continuity loans has given you a sense of what's available and what the funding can be used for. It's a really good source of debt funding for women entrepreneurs, and I want to promote it to increase the number of applications we get through from those female innovators. We're now going to move on to the Q&A, and Nigel will join me in answering the questions that have been coming through from you all. So thanks so much for your time and listening.
Thank you so much, Hamaxi. So we've got plenty of questions that have come in. Let me kick them off, and either Hamaxi or Nigel will jump in with the answers. So first one, what are the covenants that my business would need to meet during the term of the loan?
Shall I jump in on that one?
Yeah.
So there are two sorts of covenants that are set out in the loan agreement. There are information covenants. So every quarter you will be required to provide us with management information about the business so that we can check the financials and make sure that you're adhering to the financial covenants that I'll talk about in a second. You will also promise that you will work with your monitoring officer, who will support the progress of your project, make sure that the drawdowns that you ask for tie into your project plan and your expected spend. Importantly, there are financial covenants, so that's to show that the continued health of the business, suitability to continue to take on a loan. One of those is around liquidity, and throughout the period of the loan, we will expect you to have 1.1 times liquidity cover. And what that means is that you should have current assets, so cash, debtors, and inventories or stock that exceed your current liabilities, so creditors, for example, by at least 10%. So that's showing that if the merry-go-round of business were to stop at that point, you would have more assets that can be converted into cash than you would have liabilities where that cash would have to go out. So it's showing basic financial health of your business. Then during the repayment period, and the repayment period only, there will be a debt service coverage ratio requirement of 1.2 times. And what that means is that you would need to have earnings, so EBITDA, earnings before interest, tax, depreciation, and amortization, for the accountants among us, or the bankers. So basically operating cash flow effectively, EBITDA that exceeds by 20% the amount that you would need to pay out in that quarter in terms of repayments of loans and payment of interest on loans. And that's not just the innovation continuity loan, but any other loans that you might have. So those promises that you're making to us will show that you are providing us with information, working with the monitoring officer in continued good financial standing. And I would encourage everyone, either through the early metrics survey or through the innovation funding service portal, or indeed in the what are innovation loans and how to apply on the Innovate UK website guidance. In all three of those, there are links into the terms and conditions that will be set out in detail in the loan agreement. Take a look at those. Those will describe what the loan agreement and what the security documentation will include. They're very important things for you to consider, because taking on a liability is a big commitment. We want to make sure that you've considered that your board of directors, that your shareholders have considered that you've taken financial and legal advice where appropriate, because this does represent a significant commitment for you.
Thanks, Nigel. So we've got another question and a subsequent one as well, so I'm going to link them together. What types of organisation or innovation loans available for a business that will be classified as a micro startup with no trading history but still delivering a product? Would they be eligible at all?
So Maxi, do you want to?
Yeah, so the innovation continuity loans are open to all SMEs and third sector organisations. So as a micro or startup, then yes, they will be eligible.
Perfect, thank you very much. So next question, what is an undertaking in difficulty?
I'll jump in on this one, because I've answered this question quite a lot over the years. According to the state aid framework under which we are currently operating, and not quite sure what that's going to look like in January after the end of the transition period, but for the moment we're operating under the basic European Commission state aid framework. There's a requirement that governments of member states aren't allowed to offer aid to businesses that are considered to be in difficulty, because that's then about rescuing and supporting the company through its business difficulties, rather than promoting research and development and innovation, which is what Innovate UK is there to do. So there is a definition of an undertaking in difficulty, which means basically, if you're a small or medium-sized enterprise and you're more than 3 years old, if your accumulated losses exceed 50% of your subscribed share capital, then you would be considered to be an undertaking in difficulty for the purposes of R&D support that Innovate UK offers. However, because of the COVID pandemic and the economic consequences of that, the first step that the European Commission took was to say, if you were not an undertaking in difficulty at the end of December last year, but problems have been caused since then as a result of the COVID pandemic, then that's okay. They would look, we can look at the 31st of December position. And then the framework was changed again because the COVID pandemic was continuing and worsening and the economic impact was becoming more severe. And now, if you are a micro or a small undertaking, and again, I'd encourage you to look at the European Commission definitions that we use, but basically, if you have fewer than 50 employees, there's a turnover and an asset test as well, and you do need to take into account the group position if there's more than one company, or if you have shareholders that own more than 50% if they're a corporate. But basically, if you're a small or a micro business, then you are exempt under this temporary framework under which innovation continuity loans are offered from having to worry about that undertaking in difficulty test. We think that most applicants for innovation continuity loans are likely to be micro or small businesses, and therefore we hope that for this particular activity, the undertakings in difficulty test shouldn't be the problem that we know it has been in many other forms of support that Innovate UK has offered.
Thanks, Nigel. And just jumping back slightly, Kelly wants to know, are there any restrictions on company size?
Yes, so a company must be a small or a medium-sized enterprise. So very broadly speaking, that's with fewer than 250 employees. I can't remember the turnover test and the net asset test. I think it's
50 million turnover and 40 million in balance sheet.
Yeah, something like that. There is a link in the competition brief to the detailed definition of an SME if you go online and you search for SME definition from the European Commission, there's actually a really helpful guide. There's a booklet. It works you through the steps. It takes into account complications that may arise if you've got equity investors who are venture capital firms, for example. It can get complicated. It's a really, really helpful guide online that I would encourage people to look at to make sure that you know that you are an SME.
Perfect. And I think you might have covered this before, but I'm just going to make sure that it's completely clear. What is considered sufficient as a cushion for cash flow analysis?
It depends. That's a judgment call that will be made by the credit specialist who's reviewing your financials. It will form the basis of the decision made by the credit committee. We want to be sure that there is the business that's applying for the loan is able to afford that loan, so that when interest is payable, which will be from the end of the first quarter, and then when repayments need to be made, there will be sufficient cash flow in the business at that time to be able to make those payments when they fall due. We will look at sensitivities. Things always get in the way of business going smoothly. So we'll look at sensitivities around, for example, what if sales are delayed? What if sales are lower than expected? What if margins are lower than expected? What if other costs are needed to really to get into the market? So if we get to the point where we go into detailed credit analysis, we'll look in detail at those things. Our credit specialist at that stage would contact you as an applicant to understand those issues, so that a judgment can be formed by the credit committee on the suitability of a loan. But there isn't whilst there is a formal requirement for meeting the covenants around liquidity and debt service in the repayment period, we don't have a set X percentage of free cash flow excess over whatever. We don't work that way. This is cash flow lending. So one of the things we will look at is the suitability. We'll also look at other things. We'll look at the quality and breadth of the leadership team of the business. You know, if you're looking to take a highly innovative product into a really new market, have you got the breadth of capability across your management team, the commercial experience, for example, as well as the technical experience around the innovation activity? Have you got that ability and the likelihood, the breadth, the capability, the depth, in order to get into that new market that you're seeking to access, as an example?
Brilliant. So we've got another question. Can a company apply for more than one loan to address different projects?
Do you want me to take that one, Nigel? Yeah. Yes, the answer is yes to that. But the loans are very much focused on the actual project. So if you've got under Strand 2, let's just say, if you've got a follow-on project from one that's been completed, then you can apply for a particular project, for that particular loan for that project. If it's a project that is totally new and it's about sort of continuing something that Innovate hasn't funded before, you could potentially apply for a Strand 3 innovation continuity loan. So it is possible to do, but obviously we will be looking at the organisation as a whole when it comes to looking at affordability for each of those separate projects. We'll be looking at how much the loans are that are being extended to that particular business. So there are things that need to be considered, but the overall answer to that is yes.
Thank you so much, Amaxi. So we've got another question which says, we've co-founded a startup during COVID-19. We have already tested the prototype and feasibility. We have product development in the pipeline. Are we eligible?
I think there it comes down to what's the loan to be for? What's the R&D project? What's highly innovative about the activity that needs this support? So if the activity is a high quality research and development project, then yes, you're eligible to apply. I think what we would look at there is, it sounds as though it's quite late stage research and development. So maybe if it's about proving the prototype, maybe it's about having user-facing trials, maybe it's about scaling up the manufacturing process if it's a product, or maybe developing the software platform so that it's super scalable if it's a software as a service activity. Those sorts of things can be classified as later stage research and development. If what you're seeking the loan for is commercial activity, sales and marketing, then unfortunately that wouldn't fit, because this is a loan for research and development activity. So in the guidance for applicants, in the competition brief, we tried to describe and explain those things on Innovate UK's website. We talked through the different stages of research and development, from feasibility studies to industrial research and then to experimental development. We describe what sorts of activities are typically included in those definitions of research and development. If you fit within those sorts of activities, and the reason your activities, your project is being held up is because of the COVID pandemic and the economic consequences of that, and you're suitable for a loan, then you would certainly be very welcome indeed to apply.
Thank you very much. And this might be a simple question. Can the loan be repaid early without penalty?
Yes. We will accept early repayment, and there are no penalties for doing that.
Perfect. Sorry, Maxie, did you want to expand on it?
I was just going to say that the loans are drawn down quarterly in advance, so that we will know, and you will know how much you need and when it's needed. And yeah, if the early repayment is required, then yeah, that's not a problem at all.
Perfect. So then I've got another question. We have our business plan and revenue generation plan in place. So are we eligible for Strand 3 loans?
I'll go back to what I said before about if there's an R&D project, if it's highly innovative, if the business is suitable to take on a loan and it's affordable into the future, and the reason for needing the loan is because otherwise your work would not go forward because of the impact of the coronavirus pandemic and the economic consequences of that, then absolutely you would fit within the requirements.
Perfect. So another question, what sort of evidence of loss or damage due to COVID-19 should a small business provide for this loan?
So there one of the questions included in the questions that we ask we want you to tell us effectively why is the pandemic meant that your innovation activity is under threat. So often some of the things that we've seen are, for example, that it's an existing business, it's generating revenues, it's using those to invest in research and development, and the COVID pandemic has meant that those revenues have dropped off significantly because customers just aren't buying things at the moment. That economic impact, that recession is really significant. That's loss or damage as a result of the COVID-19 pandemic. That means that you haven't got the funds to keep doing your R&D and innovation activity, therefore a loan can help to support that. Or it may be that the costs of the activity have gone up significantly because accessing a lab or an engineering workshop or an office is not as easy as it used to be because of social distancing. It may be that the cost of materials has gone up significantly because you can't just buy them from that cheap supplier in China that you needed for your R&D work. You've now got to source them from someone more expensive in leafy Surrey or something like that. Or it may be, and I think this is perhaps the most common answer we've seen around this, is that there's a business that was looking to attract new investment, new capital, equity investment from investors, and that capital raise has been put on hold, or it's fallen through, or it's much lower than was anticipated because investors, and we know that many angel investors, many venture capital firms are pulling back on making new investments in businesses. They're very often supporting their existing portfolio companies and only providing them with enough funding to keep going on the really the bare essentials of their business. So those sorts of things represent examples of the economic impact of the COVID-19 pandemic that might be putting at threat your innovation activity, where a continuity loan could help you to continue that R&D activity, help you get into market, because that has long-term economic impact, not just for your business, but for the UK as a whole.
Thanks, Nigel. Another question, can you please explain state aid and how you calculate what part of this loan will be classified as state aid?
I'm going to answer that one as well, because I'm quite used to this. So first thing I would say is, if you go onto the Innovation Funding Service and you look at the competition brief and you read the guidance for applicants, we do try to explain the state aid. But in a nutshell, state aid is where a state offers a benefit to one or more companies that's not available, or one or more undertakings that's not available to every single organization in the country, or indeed the whole of the European Union, as it was at the time. Who knows what it will be in January. So where we're benefiting people, that's state aid. In terms of the normal activities that Innovate UK does, it's through grant funding. So because the grant is free money, that is a form of aid, and the amount of the aid is the amount of grant that's given. With innovation continuity loans, because they're not free money, because they have to be repaid, the state aid, the benefit, the equivalent of a grant, is the difference between what a loan of that nature might cost in the marketplace from a commercial lender and what we're charging. We charge 7.4%. We don't charge any fees. So there's no arrangement fee, there's no quarterly monitoring fee or anything like that. The market rate of interest for venture debt is, I don't know, 10.5, 13, 15%, and they'll charge you a 3% arrangement fee, and they'll charge you quarterly monitoring fees of, I don't know, 0.25% of the value of the loan or something like that. That differential between the market cost of an equivalent loan, which can be based on a reference rate if there's no direct market comparable, and what we're charging, that difference over the life of the loan is the aid that we're offering. And that amount, and on the spreadsheet that we have, you can calculate that for yourself. We've got a template calculator in there that will help you do that. That amount of aid must be below the limit under the temporary framework of €800,000 for most businesses, and take into account other temporary framework aid that you might have received, for example, CBILS. But you need to talk to your provider, who will tell you whether the aid that you've had is temporary framework or something else, and how much that aid is. So that's a complex answer, because it's quite a complex question. And the other thing I have to say is that this all applies up to the 31st of December. After the 31st of December, from 1st of January, we're outside of the transition period, and at the moment, there isn't any information available as to what subsidy control from the UK will look like after the end of the transition period. Our expectation is that it's not going to be materially different from where we are at the moment under the temporary framework. If that changes, we will notify people.
Okay, perfect. Thank you, Nigel. We've got another question. If you apply for the loan, can you then reapply at a later stage for Innovate funding relating to this innovation?
You can apply, but you can't have two forms of support for the same project. So if the innovation is, if there's a different element of the innovation that's separate from the project that's funded by the loan, that's fine. Just as you can't apply for a loan to fund existing innovation activity that duplicates the project, except in certain very limited circumstances under Strand 1 of these loans. But basically, you can't have two forms of state aid for the same project activity. That's not what we're trying to do.
Thanks, Nigel. Is there an option to apply for a smaller amount in January and request an increase to the amount the year after for the same project?
Shall I take this one, Nigel? Yeah, as Nigel said, no. The competitions that we're running for the Innovation Continuity Loan close on the 13th of January. So that's when all the applications have to be in by. The first loan drawdown needs to happen by the 31st of March 2021. No, yes, that's right. Yeah, getting my years. So it means that at this moment in time, we don't think that we'll be running any more competitions for the ICLs going into the following year. So any application that comes through will need to come through in January. The minimum loan amount being 250,000, so it needs to be there or above that figure.
But what I'd say to add on to that, and perhaps slightly interpreting or guessing the interpretation of the question, is what we're looking for is to understand what your total project is. It's a one-year project between basically effectively probably the 1st of April 2021 and the 31st of March 2022. So in that one-year period, what's the loan amount that you require? That amount must be between £250,000 and £1.6 million, because those are the limits of the loans. Your project can be larger, but our loan will only be for that amount. The drawdown, the timing of borrowing, depends on your project. So the loan will be used quarterly in advance. So at the beginning of the first quarter, you'll say, in the next 3 months, my project plan says I'm going to spend £100,000. So you will borrow £100,000, spend it during the quarter, demonstrate to the monitoring officer that you have spent it on the right sort of things, that your next quarter's forecast remains valid, and then borrow the next £100,000 for the next quarter, and so on. So that effectively means that you borrow a small amount and then borrow a larger amount later, but we need to know at the outset what the total loan amount is, what the total project is, and then it's funded quarterly in advance, not all at once.
Thank you, Nigel. Can the loan pay for capital equipment needed for the R&D project?
Yes, it can fund the eligible cost of the usage of capital equipment in your project. In the Innovation Funding Service, when you're completing your project finances, there are forms, there are parts that you need to complete about labour, materials, overheads. Capital equipment usages is one of those. So you'd need to show the original cost of the equipment, the accounting life of that equipment, the value of the equipment at the end of the project, so 1 year later, at the end of the project, which includes the availability period and the extension period, so it could be 3 years later, so you'll need to look closely at that. And that amount and the extent to which the equipment is used in the project. So if you have a 1 year availability period and a 2 year extension period, that's a 3 year project. The repayment period is outside of the project period. If you had a piece of equipment that costs you £100,000 and at the end of 3 years it's going to have no value at all, and you're only using it in the project, then the full amount of that capital cost would be an eligible cost, and you can borrow that when you need it to fund the purchase of that equipment. If you only use the equipment half of the time in the project, then only half would be an eligible project cost. So in our early innovation loans program, we provided funding to a company that needed to purchase a second-hand helicopter because they were using it for testing autonomous flying. So they stripped out the seats and didn't have a pilot and put a computer in instead, which is quite scary. If they had put the seats back in and used it every weekend to jet off to or helicopter off to Monaco, then that element, that weekend use to go gambling, would not have been an eligible project cost because it's not being used for R&D purposes at that point. And we thought that at the end of the project period, the chances of that helicopter having a second-hand value without seats and probably having fallen over a couple of times since it's got or testing autonomous driving in the air, we thought that it probably wouldn't have a great deal of value at the end of the period. So we fully agreed with the company that the residual value was zero.
And not if I can't fly off to Monaco every weekend now. We've got a couple more questions. If you can summarise again the eligibility criteria for Strand 3, that would be great.
Yeah, so Strand 3 is open to those applicants that haven't been previously supported by Innovate UK. They're looking to carry on, follow on continuity activity around an innovation project. And the other side of it is if they are supported by Innovate UK at this moment in time, but they have a new project that's totally different to the one that we've supported them with, then they can also apply.
Perfect. Must the business be registered in the UK? Can micro or SMEs registered overseas but researching UK markets or UK foreign market R&D apply?
The business does not have to be registered in the UK, but we would expect the research and development to be carried out by a UK-based business. So if it's an overseas company that's just popping over to the UK to find out whether we eat fish and chips and have mushy peas or gravy on our chips, and then goes back home, and that probably wouldn't be based in the UK. So we would expect it to be for UK-based businesses, which may be a branch of an overseas company, and we would expect that the results of the innovation activity to be exploited from the UK, such that you may be selling overseas, but you're generating revenues, you're generating profits for tax purposes, you're employing people in the UK. This is UK taxpayer funding. Therefore, we want to see the UK economy grow. And that's by supporting UK-based businesses to carry out R&D and exploit that innovation from the UK.
Perfect. Thanks, Nigel. You did get a comment of somebody saying that you're making us all hungry at the moment. We've got a question that says, what if we need the funds earlier? Can we draw down in January versus March?
The closing date for applications is the 13th of January. By the 19th of February, we will notify applicants whether they're going to detailed credit analysis or not. Those that go on to detailed credit analysis, I hope that we can get to final decisions by the end of February, in the middle of March. That's likely to be the earliest time for drawdown. So drawdown in January would not be possible because unless very, very exceptionally, possibly under Strand 1, but certainly Strand 2 and Strand 3, January drawdown would not be possible.
Perfect. We've got another one that asks, can the innovation loan be granted for a new food? Funds would be used to patent it.
If it's research and development activity and it's considered highly innovative by our assessors, then absolutely. And within the eligible costs in any project for us SME is costs of £7,500 for IP protection are an eligible project cost.
I've got another question which says, if we have acquired the assets of a company that had received an Innovate UK grant, which stream would we qualify for?
That would depend. It would depend on the previous Innovate UK award. So if that was a live project, then that would come under Strand 1. If it's following on from a project with an Innovate UK award that had completed within the last 3 years, then it would come under Strand 2. If it was supporting innovation activity that had not been supported by Innovate UK award in the last 3 years, then it would come under Strand 3.
So potentially all of the strands depending on their specific situation at that point in time. We have another one that says, we have a research project that we want to do. However, it does not have direct financial results. We've been talking to universities about partnering with them to get this done. Do the R&D projects need to have a proper proven financial return? And then they've put in brackets, we aim to make the money back through publicity after the research report.
if there's a route to generating cash that will be able to pay the interest and repay the loan in the future, then that's fine. My gut feel is that if I was sitting on the credit committee and I were to see that, I'd be looking quite hard at the likelihood of enough revenue being generated to pay back a loan in excess of £250,000. So think carefully about whether it would be suitable to borrow that amount of money unless you were really, really sure that you were going to be in a position to repay it. We don't want to lend money to people that they can't repay, because if they fail to repay, then they breach the loan terms, they go into default, and unfortunately that means that at that point we would need to take legal action to recover the debt. And whilst we know that that will happen sometimes because we're taking a lot of innovation risk, quite a lot of market risk, we want to be a responsible lender. We want applicants to be responsible applicants. We don't want to have people dig a really deep hole and then not have a way to get out of it, because that's going to be a really unfortunate position.
And then we've got a question that says, you mentioned sustainability loans. What are the prerequisites for this and the timings?
The Sustainability Innovation Fund was grant funding competition, which has completed. So innovation continuity loans don't have a specific sustainability angle to them. They're open to any technology, market, etc.
So I've got a few last questions and I'm very aware that time is running out. So can I apply for the innovation loan if I've applied for a smart innovation grant but haven't found out as of yet if I'm successful?
Yes, you can, but you really be sort of hedging your bets. We can't extend funding for the same project under two sort of funding, under a grant and an innovation loan. The only thing I can suggest is that if you want to hedge your bets, then yes, apply for the innovation continuity loan. But if you are successful with the grant, then you may need to withdraw your innovation continuity loan application.
Perfect, thank you. How does this loan differ from usual bank loans?
There are a couple of ways. One, we have real appetite for innovation risk. We have real appetite for the market risk that comes along with that. If you're doing something new, the market is probably unproven, so we're taking risk around that. We look at, we're very forward-looking. We look at future cash flows. We don't take personal guarantees. We charge less than banks. We don't charge fees, and we can offer loans of up to 7 years with a staged drawdown, an interest-only period before you get to the repayment period. We are very confident that no bank is offering that sort of appetite for risk around innovation. If you have a bank that's prepared to lend you this money on better terms, then absolutely go for it. Go to use the bank. But if that's not suitable, and it ties in with your other capital raising from shares, from equity investors, then we hope that innovation continuity loans may be suitable for businesses that are highly innovative.
Okay, so I'm going to whiz through these questions as quickly as possible. As mentioned, startups without trading history are eligible for loans. Are we eligible for Strand 3? In particular, what are the requirements in terms of financial documents to be submitted for it?
So Strand 3 is if you have innovation activity that has not previously been supported by Innovate UK in the past 3 years. The financial documents, we have a financial spreadsheet that needs to be completed with historic and forecast financial statements covering profit and loss, balance sheet, and cash flow. There's also some sales assumptions in there that may be helpful, but you don't have to submit financial documents as such. We can go and look at your accounts on Companies House, it's easy, so you don't need to send us copies.
Okay, and I'm going to just do 2 last questions very, very quickly. The last tranche of my R&D costs are due to apply after 31st of March 2022. Can I draw down this amount in advance before the 31st of March 2022?
So the last drawdown is the 31st of March 2022. That would cover the following 3 months because it's drawing down quarterly in advance. So if the final element of the project is from the 31st of March 2022 to the 30th of June 2022, that's fine. If your expectation is for longer than that, then it would not fit within the requirement that it be a 1-year project period, which is specific for these innovation continuity loans.
Okay, and then final question, because we are drawing to a close. Can you just repeat, I know you give some of this before, what advice would you give to those who may be interested in applying?
We're not allowed to give advice, but the things I would say is please read the instructions, please fill in all parts of the application, the project part on IFS, the business information on the early metrics survey, the financial submission. Read the instructions before you start answering the questions, get legal advice, get financial advice, particularly around those financials. Yeah, think about it. Anything you'd add to Maxi? Oh, and submit on time.
I was just going to say that a bit early. Yeah. And yeah, I just can't reiterate enough about read the instructions because the information is there. You know, if between now and then there are any questions that you do need answering, then please come through to our customer service team and we'll endeavour to get those answered. Please don't leave them till the very last minute because Nigel and I tend to get inundated on that sort of last day, and I certainly don't want to miss answering any responses because, you know, there's just not been enough time.
So we are drawing to a close now. All that's left to say is thank you so much, Maxi and Nigel, for being here, for answering all of our delegates' questions. If you have any further questions, as Maxi just said, please submit them to the support and customer service email address at Innovate UK. We will share that with you all afterwards, as well as the recording from this webinar. But thank you so much, Maxi and Nigel, for joining us, and thank you to all of our delegates.
Thank you.
Thank you for having us.
Bye, everyone.
Bye-bye.
Thanks.